We like to disrupt the industry, and we realize there's a lot of noise out there. So you go and look for business funding, you're going to talk to all kinds of shady business brokers that probably have multiple aliases and stuff. The funding space has so much noise out there. You could get stuck with high interest debt and no exit strategy. When it comes to business, I always recommend that, especially maybe for your main checking account, to have it with a big bank, because I've just seen it time and time again. At some point, your business grows and that bank is just way too small for what you're trying to do, whether it be getting financing or funding or trying to integrate your back end to some other thing. The other one is, again, I like to look at funding as a one-time thing, a transactional thing. Becoming bankable is more of a legacy building play. And that's what we're here to do.
Patrick Pychynski joins me here today. You can learn what his team is up to and how they can help you by heading over to stackingsuccess.com. That's going to be a clickable link in the show notes, but really appreciate your time here today, Patrick. And
Thanks.
we're going to talk about everybody's favorite topic is how we can have some credit and buy some of these properties. So really appreciate your time.
Thank you, Jack. Before I start, I'd just like to say thank you for having me on. And for anybody listening, if you guys haven't already, make sure to subscribe and give him a 5-star. He's doing some really great stuff here.
I appreciate you giving that call out. Let's start things off because you were a U.S. Marine. I thank you for your service, by the way. How did you transition to becoming a business funding expert?
Great question. So taking it from the Marine Corps, right? Joined the Marines at 17, right after high school. After my deployment, I got back. I do remember going to work, normal W-2 job. Eventually, I stumbled into my own business. So I got into the metal recycling business. This might have been around 2007, and around 2011, commodities all start crashing down. The funny thing is that business, it was a metal recycling business, had done $2 million of revenue a year. And despite having that much revenue, I never knew about business credit. So I was always operating with my own cash flow. I wasn't really using my personal credit cards, but it was basically constant cash flow issues because I was working with my own capital. I always wondered how my competition was able to scale, buy me trucks and scales. And it was with the power of other people's money, leveraging your own credit.
Mm-hmm. And if they go to your stackingsuccess.com, they can fill out a form and kind of get a profile of what they might qualify for and what they can do to improve things. Is that right?
Yes. So we like to be a little bit different. We like to disrupt the industry, and we realize there's a lot of noise out there. So you go and look for business funding, you're going to talk to all kinds of shady business brokers that probably have multiple aliases and stuff. So if somebody did not want to talk to somebody and wanted to see where their business stands, not only with the types of programs they might qualify for in terms of financing and the range, this scan is also going to let them know where their business stands in terms of business compliance. So why I'm mentioning that is because most businesses, when they go apply for a loan or a line of credit from the bank, they're typically denied. And it's because that business does not have its own 4 legs to stand on to be able to personally guarantee itself without any sort of collateral or at least a signature from the owner. So what we like to do, we specialize in helping entrepreneurs get anywhere between $50,000 to $250,000 of 0% interest capital. And the way we do that is by getting 0% interest business credit cards that do not report to your personal credit. The great thing about this type of capital is that it's startup friendly. It's one of the few options that you have as a startup in terms of accessing capital, period, number one, and 2, accessing it at a 0% rate. The great thing about these cards, like I mentioned earlier, they don't report to personal, and you're typically paying about 1 to 1.5% of the balance of whatever you're using. And that's another great thing about it. It's a revolving line. So it's not like if we went out and got you $150,000 tomorrow, it's not like an installment loan where you have to start paying on that loan. So you'll only pay on what you use, and let's just say you decided to use $100,000 for renovations or whatever. You would be paying 1 to 1.5%, which would be about 1,000 to 1,500 a month during that 0% intro period, which is generally for about 9 to 18 months. And this process can be repeated to extend the 0% for a longer period.
So although you have 0% interest, you're making the principal payment. So at least you're driving that down.
Exactly. And that's the whole idea. At the end of the day, we realize that even the 0% is short-term capital. Our goal is to make sure that you're not stuck with that high interest when the 0% is over. It's a two-way street. There's stuff that you have to do in your business to make sure that happens. And there's things that we can do also to guide you to make sure that we're ready when that 0% is running out, we're ready to go for another round of 0% cards. That happens all the time. For example, last week I was with a client. We're getting ready to go for that second round because their 0% is running out. Just an example, Chase, for example, he's got a $40,000 Chase card. As of next month, it won't have 0% anymore. We already got him approved for another $40,000 Chase card. Now what we're able to do is move the old $40,000 limits onto the new one. And just like that, we have $80,000 of 0% renewed interest for another 12 months. So now he's going on 24 months of 0% interest. And on top of that, in the background, we're really working on getting him bankable. That's really what sets us apart. And it all starts with the scan, because I want to put it out there. The funding space has so much noise out there. You could get stuck with high interest debt and no exit strategy.
Well, how do you help people manage all this? Because it sounds like a bit of a juggling.
It is. And that's why what we do is we're an advisory, and it's very intensive. It's a one-to-one. And we've broken the process down to become as simple as possible for that person on the other end, because all of this is as a result of me going through that at one point. I went from not knowing anything about business credit, having a business that was doing $2 million in revenue. I can only imagine, like, if I would have leveraged that, where I could have scaled that business and maybe exited, as opposed to just, getting hit by the markets when the commodities crashed and all that. Anybody could go apply for a business credit card and hope for the best. But what we're looking to do is collectively get you up to $250,000, generally within a 30 to 45 day window. If your credit profile is ready to go, it should take generally anywhere between 20 to 30 days to get the cards in the mail so that you can start using them. Real estate investors tend to have a laundry list of inquiries on their personal credit report. Sometimes we have to go for inquiry removal first before we actually go for a round of funding.
So you mentioned Chase. Like, I got a thing in the mail not too long ago, and I never apply for business credit. So it's just one of those things. But it was like the first time that I came in with my business name on it. You're pre-approved. And I submitted my thing and I was declined. I'm not sure why. Is there any insight as to why that might have been?
How long ago was this, by the way?
Just like 3 months ago.
Got it. Do you have a current relationship with them, or was this just like
No, just a mailing?
Good to know, because there's two different types of mail you'll get. That is more of like a promotional type of mail. So it's you've been pre-selected almost. So it's like,
yeah, that's what it said.
So the wording will even be different. So that's what that is. There's so much and that just goes to show you how much information is out there on you, that they're just pretty much collectively buying data, putting it together, and then targeting you with those offers, which usually is a indicator that you might be on the right path, but it's not to say that you are guaranteed for that. Now, because you were denied, you will be getting a letter in the mail telling you the reasons why you were denied.
It just points me to the credit report, and then it didn't. But in the end, I tried to log into the credit reporting agency and I didn't have a lot of success. So I quickly gave up on that. But that was very vague. It didn't really say.
The next thing I would recommend too is, and this is for anybody listening, it is, that happens, cards will get declined. And one of the things I always recommend, I actually made a short about this on Instagram, is to call the reconsideration line. I mean, 15 minutes of your time might be worth a 5-figure approval.
It's amazing what happens when you simply ask for some help.
And then if that doesn't work, you can always reapply 30 days from now. But ideally, you're kind of digging into why, what didn't they like about you so that you
Yeah.
could fix it and then reapply down the road.
Sure. Can you talk a little bit about that and how that helps entrepreneurs?
Definitely. So the three C's, when it comes to getting funding, it's going to boil down to these three C's, which is credit, cash flow, collateral. Your real estate audience is very familiar with the collateral side of things. What we use is we're simply leveraging our good credit and our good track history to obtain these lines of credit. Most businesses, even established ones, will never get beyond the short-term financing options in the small business lending space. And those come with about 20+% interest rates. The only way you could ever really escape that is by truly becoming bankable. And what bankable means, like I said, is real estate investors tend to think a lot about assets, and they think of assets in terms of physical things. But becoming bankable, all that means is that your business now becomes the asset. So think of becoming bankable as four legs to the table. One of them is having actual business credit scores. So most people probably don't even know what their business credit scores are. So that is one part. And we're talking about multiple ones too. So we have like the FICO SPSS. We're looking to be above a 160 there. And that right there is actually a combined score of both your personal and your business FICO scores. So it just goes to show you that personal credit has always been important, but going into 2025, it's now more important than ever to have a great personal credit profile and a business credit profile as well. So a lot of noise out there as well on the no PG, the no personal guaranteed business funding. And again, there are options out there, but at the end of the day, they're still putting a lien on some kind of asset, and you're paying upwards of 30-40%, maybe even more. They can't even call it an interest rate. They call it a factor rate.
Hmm.
The first one is establishing business credit scores. The second leg is establishing business trade lines. So you might say, like, aren't those kind of like the same thing? Well, it's kind of like your credit score. You have your score and you have trade lines. You could have plenty of trade lines and a bad score. And you could also have only one trade line and have an 800 score. That doesn't mean you're going to get approved for high limit funding. So that's why we want typically 10 to 15 reporting trade lines on your business credit report so that it can become truly bankable. And then the third part is the business compliance. So again, most people go to the bank, they could have a perfect credit score, they can have great revenue, they can have perfect time in business, full documentation, they still get denied by the banks. And that's because the banks are not going to lend to a business that's not compliant, because once they give you the loan, they're going to repackage your loan and sell it out in the market. And if your business isn't compliant, they can't do that. And those are little things like having a residential home address, for example, a cell phone instead of actual business line registered. Little things like this is what could cause denials way before you even actually apply, way before the banks even pay Experian, Equifax, or TransUnion to actually look at your credit reports. That's why we have the scan. It's very similar to what businesses do. They're able to pretty much pre-qualify and eliminate 80% of applicants before they even pull their credit report.
Mhm.
So that was the third leg, business compliance. And then the fourth leg would be the bank rating. You eventually, in order to become truly bankable, you want to have a good bank rating. And a bank rating is a 90-day average daily balance. And we want to be above 10K,
Sure.
because that's what gives you what they call L5 bank rating.
Yeah, there's a lot to unravel here because these lines of credit aren't reporting on your personal credit report, but in the end, they're still going to be reliant on your personal credit history for that initial establishment, right?
Yes, for that initial. And it will take no less than 3 months for a business to get bankable, because generally what we're looking at is, again, 90 days of average daily balances above 10K, 10 to 15 reporting trade lines. Let's just say if you were starting from scratch, would take at least 90 days to start reporting on your business credit reports. It could take somebody up to 6 months. It really just depends on how long they're dragging their feet. And I just talked to a real estate investor that has been in business for 5 years. So they're actually established. They just haven't, because they don't know, put in the little steps or the attention to actually become bankable. So sometimes it's a matter of just shifting the strategy a little bit in order to be able to do that. And the reason why it's so important, again, is so that you're not stuck with high interest and so that your business becomes an asset, just like your properties. Your business now can then personally guarantee bank term financing. Now we're talking up to 5 million and up to 10 years with much better rates. We've been able to beat the SBA by 2 points oftentimes because you become essentially the 1%. You become the bankable.
Okay. But you mentioned 10 to 15 reporting lines. Like, could you elaborate a little bit on that? Like, are you talking like 10 to 15 lines of credit, or what are other things could we be taking advantage of that maybe we are, that is helping us establish this business profile?
That is a great question. So for somebody that's first just getting started out, by the way, if you run the success scan will actually pull your credit, once we integrate the reports, we'll actually pull your 3 personal credit reports and also pull your business credit reports as well. But one of the things I recommend if you're not doing the scan is to go to nav.com. And that is a platform that, number one, will be able to show you your business credit scores. And it'll also work as a vendor trade line account that will start reporting on your business credit. You don't want to, because it's like with a personal credit report too. You want comparable credit at the end of the day. So we don't want to start filling these trade lines up with a bunch of vendor accounts and things like that because the underwriters see right through it. But it's a good place to start sometimes. I do want to cover that because there's a lot of programs out there that push, hey, building business credit, sign up, pay $1,000. And now I'm going to go tell you to buy a bunch of pointless toilet paper and office supplies just so that hopefully 2 months down the road, they could report that payment experience to the business credit bureaus. Nowadays, that's really not needed. What we're looking to do is add the first 3 trade lines to your business credit report so that it can generate a score. So instead of buying pointless supplies from these net 30 vendor accounts, what you can do is sign up for nav.com. And it is a monthly subscription, but again, at least you're getting a lot of value from it because it's almost like an Experian where it's giving you a lot of insights into your business credit scores and everything. And they can report up to 2 trade lines on your business credit report. There's another service called FairFigure.com, very similar to Nav. They're a little bit newer in the market, and I think they're on their way to becoming maybe a little bit better. Same thing. Credit monitoring service and also a trade line. And then there's one more that I recommend, which is eCredable. Just keep in mind, they do offer a personal side to it as well, but we're talking right now about the business side. What they're able to do is, let's just say you have been in business for a few years, you've got vendors that you deal with, but they're just not reporting on the business credit reports. With a service like eCredable, you can start to have those vendor trade line accounts start reporting on the business credit reports. Between those 3 services, if you don't have a credit score yet, or if it needs help, like it needs to be a little bit higher, because with the SBSS, we're typically looking at 160 plus. With the rest of the business credit bureaus, we're looking at having at least a 70 plus rating. Once we generate that score, which again, we generally need 3 trade lines, we can then start to add. We move on into what they call tier 2. So it's done in tiers. And tier 2 is where you can either start to get gas cards, or if you're a real estate investor, you can maybe start to go to Home Depot and Lowe's, start to get what they call vendor credit accounts. So you might have 20 grand, but it's, you can only use it at the store, right? It's not like an actual Visa or MasterCard credit. And then again, once you're at the 5 to 7 trade lines mark, those are the beefy financial trade lines that will make a difference when the underwriters start to look at the file. The other thing we generally recommend if they're working with us to get bankable is comparable credit. So a lot of times we'll use even the funding that we go get this is a strategy. Let's say if you did want to build comparable credit really fast, let's just say you're liquid and you've got money in savings. Well, instead of it having sit there, you could, let's say, allocate some of that money towards getting a CD and then getting a secured business line of credit or loan against that CD. And now what you have is comparable credit, very similar to what you're looking to go get.
Yeah, if this is a lot of daunting speak, I'm going to direct everybody to your website again, stackingsuccess.com. Fill out that form, see what you qualify for and how Patrick's team could maybe help you establish this business credit. What's really important here now, guys, is that if you found some value in what we're talking about so far, this show only grows if you share it with one of your investor friends. So please consider doing that. If you're watching us on YouTube, give us a like and subscribe. So, Patrick, you helped us lay this table or build this table here now. You gave us a few websites. Is there anything else like low-hanging fruit that you already mentioned? Us investors, real estate investors, we're kind of just blind to the fact that what's possible in some of this stuff. So is there anything else we should be aware of?
Yeah, I mean, like I said, some of the common things I see with real estate investors, they tend to be very great clients because over the years, they've got multiple mortgage accounts on their personal credit profile. They tend to have a thick profile. Over time, those are good files to work with, but they also tend to have a lot of inquiries. They tend to use their revolving credit on the personal side a lot. So as a result, maybe 6 months of the year, they have a very bad score because they're in the middle of a fix and flip or some kind of project, right?
Mhm.
So I would say maybe that. And then there's a good group of real estate investors that, again, they're asset rich and they really don't see much value in having a great credit score or building business credit. What I like to tell people is just think of funding as a one-time experience. Becoming bankable is really just having the banks come to you for funding and having your business become that asset that gets that type of financing.
Have you seen like an ideal range you'd recommend? And what are they typically using it for?
Yeah. So this could be used for all kinds of things. Investors might be thinking, because I'm about to say it can be used for down payments, earnest money, remodeling. It could be used for things that even don't typically accept credit cards. So that's stuff we facilitate as well after we get the funding. There's ways to turn credit into cash without incurring a cash advance fee, retaining the 0% intro period. And at the end of the day, having that liquidation expense be a tax deductible event as well. And that will typically cost you around 3 to 6%, depending on who you're paying and how you're doing it. But at the very, you're still, again, retaining the 0%. It's a tax deductible expense. And you're able to take the credit into cash without actually incurring that cash advance fee.
Is there any way that we can use our personal credit into more of this business? Is there any way we can transition some of that?
What we want to do is I really look at the personal credit as sort of like the goose that lays the golden eggs. So we want to just continue strengthening that profile. By strengthening, I mean like it's not just the score. What we're generally looking at, a strong profile is basically a credit report that has 10 to 15 plus open reporting accounts, all in good standing. Your revolving accounts are under 10% utilization. Your average credit history age of revolving accounts is at least 5 years, and you have at least a couple cards that have $10,000 limits in them. Again, going back to that comparable credit. With those types of files, we're generally able to unlock anywhere between $100,000 to $200,000 within 30 to 45 days. There's real estate investors that are looking for more, and that's when the personal loans come into play. Because again, until we can get truly bankable, we're not going to be accessing lines of credit and loans in the single digit or even low double digit numbers. So what we can do a lot of times is, let's just say it can begin to stack up really quickly. And that's how we're able to get 3 to 400,000 is by having a combination of business credit cards and personal loans as well.
You emphasize the importance of relationship banking. Can you talk a little bit about that and how people can cultivate those type of relationships?
Yes. A lot of people aren't going to want to hear this, but when it comes to banking relationships, you do not want to be monogamous. Maybe in your romantic relationships, but with banking, you really want to spread your wings there and make sure that you have your toes dipped. Even if it's not on the business side, at least establishing some kind of personal relationship with those tier one banks. The longer you're in business with them, the more products you use by them, obviously, the more they're going to consider you for their products and the better chances we have at higher limits and approvals. So when they come in through us, what we're typically doing when we're coming up with a funding plan is we want to leverage the relationships they got, the low hanging fruit, and then we want to fill in the blanks with the relationships they don't have. That way we can make sure that we have continuous rounds of funding set up for us.
This is kind of the opposite of what a lot of real estate gurus would advise, because in many cases, especially when you're doing fix and flipping, it's usually targeting those small local banks that have those underwriting departments that are more local and you can actually build a one-on-one relationship with, versus that in some cases they'll tell you to avoid the big ones.
Yeah. And that's the thing, right? Each bank has their own specialty that they like to go into. Local banks do have their place. A lot of them like to focus on commercial real estate lending. So it's always worth looking into the local banks. But on a slightly other topic, when it comes to business, I always recommend that, especially maybe for your main checking account, to have it with a big bank, because I've just seen it time and time again. At some point, your business grows and that bank is just way too small for what you're trying to do, whether it be getting financing or funding or trying to integrate your back end to some other thing. Those credit unions tend to be very behind in tech and very limiting.
So I'm sure you have some common misconceptions about business funding and credit that you encounter regularly. Can you bust some myths?
Definitely. I mean, as I mentioned earlier, there's a lot of people that talk about this PG EIN-only credit. And sadly, those people are just targeting those that have bad credit. And then if they're not talking about building business credit to obtain funding that way, they're probably trying to sell you into some, again, revenue-based product where you're looking at 20+%. So that would be a big misconception there. The other one is, again, I like to look at funding as a one-time thing, a transactional thing. Becoming bankable is more of a legacy building play. And that's what we're here to do. So there's a lot of companies out there that will, they charge a success fee on the back end. So oftentimes I tell people the most important part of this whole process is what happens before the applications. But when you go to those, I call them McFunding companies, they want to get you processed right away, see what sticks, and then send you that back end bill so that they can get paid right away. So I would say maybe for those looking for financing through this route, to be very careful, because the most important part about this whole process is the preparation beforehand. You just go apply for business credit cards, you may as well just go do that yourself. Like watch a YouTube video and go do it yourself. The reason I say this too is because we turn away a lot of people because our program is very intensive. It's a one-to-one, and we need to make sure that you are going to have the right expectations and that you're equally as committed as we are. We like to do this because we work with all kinds of business owners. Like I was just talking to a doctor. We have a rep that has to kind of adjust his hours because he has to meet them like at 7 or 8, but we make it happen. And the doctor's extremely busy. He had come from another funding company that gave him a portal. They were making him do too much stuff. We try to make it as easy as possible for that person. But at the end of the day, there is still some stuff you're going to have to do. And there is some time that you have to take into doing this. It's not always going to be immediate. I don't know about you. Time flies, and 1 month, 2 months really isn't a lot. And I can guarantee you that if you wanted funding a month or two ago, you're probably going to, at some point, want funding again.
Right. I was hoping you could, you mentioned this doctor, but do you have a real estate investor story you could share? Like somebody who's gone through your process and where they are today?
Definitely. I got Frank. Frank's a good one. He's out of New York, but he's been in business a long time. This was a very short window too. Actually, I like his story a lot because Frank, typical real estate guy, thick profile, lots of mortgages, came in with lots of inquiries, think he was in the low 700s. By the time we got done working with him, he was at an 800. But the coolest part about it is that he had never hit an 800 credit score. So it was like the first time he hit an 800 was with us. And we were also able to get him, it was a crazy amount, just a little bit over $400,000 in funding. And that was a combination of about 100 and let's just round down 100,000 of 0% interest between two cards. And then the rest was two business lines of credit. One was for $240,000. That was actually one of the ones that were at prime rate plus 0%. And back it was so 8.5%. So that was really cool to see because again, they had a great profile, just need a little tweaking here and there. And within that 30-day window, we were able to get them 415 is what it was. It was 240 from TD Bank. It's another $80,000 line of credit. And then it was like 0% credit cards. And we could have gotten more, but he didn't want credit cards. We're currently on round 2 with him. And he wants just more lines of credit, basically.
Sure. Well, you've alluded to it a couple times, so we might as well just tackle it. Like, I'm sure you have to charge for this. Like, do you mind sharing? Like, how does that piece of it work and how do you get paid?
Yeah, not at all. I mean, we charge a flat consulting fee. It's $7,000 one time. I honestly try to make the money part be the last reason why somebody can join. And when I see a profile, I was on the phone earlier with a real estate guy out of Kentucky. This was a referral. So he just happened to get the referral. He already has a call scheduled tomorrow with another company, but I already took him through the scan that we talked about, gave him a funding range report, all within 40 minutes. So I'm pretty certain he's going to come back.
Now, you said you were making sure that the cost of it is the least of their concern.
Cost is a flat $7,000. I don't try to have it. I've told people, we're going to be working over a long period of time. And I want to make sure that you're set up for success and it has to make sense. Actually, we were having a team meeting about this because it comes up a lot. There's a competitor out there that charges a flat fee. The doctor that I was telling you about, that was who they came from. They're cheaper than us. And on the surface level, it seems like a better offer because their guarantee is that they'll work with you until they get you $250,000 and it's for 12 months. It's like a yearly subscription thing. Our offer is a little bit different. We work very intimate on a one-to-one level, and we will work with you until we get you $100,000 of 0% interest funding. And it's just a flat $7,000. The reason we're a little more expensive is because come to find out, their one-to-one isn't really one-to-one. It's a portal. It's logging in. It's not talking to anybody. For us, we have it very clear. There are 3 milestones that you get on Zoom calls with us. The first one is after you come on board. The first one is the onboarding, where we collect all the documentation and make sure we have everything to come up with a custom plan for you. The second milestone in Zoom call is getting on that call to go over the plan and any last minute things we might need to do. So for example, inquiry removal or, hey, turns out you have a collection on your account. Once that has been completed and we're ready to go, the third call is our funding call. We're getting on that Zoom call and we are applying for those banks with you.
Well, let's leave everybody with some final thoughts, especially those people that are new to real estate investing or just entrepreneurship in general. Is there some initial things that they should be doing to just kind of prep themselves before they even contact a service like you?
Yes. Yeah. So working on getting your credit limits up if you haven't already. If you have derogatory items on your credit report, start credit repair. As a matter of fact, we have a free to start credit repair option. We do that because again, it's just like do something, but just don't stay still, so yeah, working on your credit and establishing those relationships. So even if you don't have your business formed yet, I say get all of them, but you want to be in with at least one of the tier 1 banks. Because at some point, those tier 1 banks, when you have your business, also have 0% interest business credit cards. And it's a very easy segue. If you start now, open up a personal checking account, maybe start with a personal credit card, work your way up, put some spend on it, have those limits come up. You'll often find that if you do that right, since you're internally in the system with them, you have a relationship with them, you'll start to get targeted offers, not the pre-selected ones, but your pre-approved ones.
Sure. Well, Patrick, this has been a fantastic conversation. Before we dive into the rapid fire questions, is there anything else we should have tried to hit on here?
I think, again, if real estate investors could look past just the funding transactional side of it and think of this as more of building an asset, your business is an asset. Ultimately, you do this, it's one of the things that you probably need to do if you want to ever exit your business.
Okay. We'll jump into the rapid fire and close out this episode.
Yes, sir.
What lie do entrepreneurs often tell themselves?
I'm not good enough. That's the one that comes up a lot for me. It's one I fight every day.
If you could go back in time and give your younger self a piece of advice, what would it be?
Start now.
Do you have a book recommendation?
Change Your Life, Change Your Thoughts by Wayne Dyer.
And then finally, what single process or tool have you implemented that has had the biggest time-saving impact?
Well, everybody's probably going to say AI, but more specifically, what I've done is I've actually started to record a lot of my day. So that way it can all be transcribed and fed into the AI, and the AI can exactly know what's going on when I start to ask it questions.
Well, Patrick, this is fantastic. One last time, it is stackingsuccess.com. Clickable link in the show notes. Really appreciate your time. This is just great to chat with you.
Likewise, Jack.